Yeah, hi, my name is Maryann Marcellus. I'm 32 and I'm calling in from Los Angeles, California.
Awesome. Marion, what do you do for work in LA?
I do acting work, mostly on camera, TV, film, commercials. I've also done voiceover and I also do promo work.
And how much do you make a year on average?
My income varies from year to year, like anywhere from like 25 to about like 45 grand a year.
Okay. So if we're taking an average of, we'll call it 40,000 a year, if that's about where you're on track for this year, so that puts you about $2,750 a month take home pay. Does that sound about right?
About right, yes.
Awesome. And did you go to college?
I did go to college. I went to college in Pennsylvania. I actually have a degree in elementary education, but I'm not doing anything with that right now because I really want to pursue.
Okay. And did you take out any loans for your college education?
I didn't. No. I realized that I'm very lucky that I didn't have to take out any student loans. My dad, he was a state employee for Pennsylvania, and there was this one program where the state employees were able to put money in account to invest for their child's college. And so my parents put money into that account. And it was through that account that I was able to pay fully for my school. And I also got a scholarship for the 4 years that I was in college. So those two things combined, they helped me to not have to take out any loans. And I'm very thankful for that.
Awesome. That's good to hear that you don't have any student loans right now. So, how would you define your current financial situation on a scale of 1 to 10? 1 being terrible, 10 being best in the world.
I would say maybe about a 5.
And why would you put yourself at a 5 right now?
Because I have, some money in the bank, like savings and checking. So I'm not, completely destitute and completely broke, but I wish that I had more disposable income in case of an emergency, or just more income to be able to do the things that I want and need to do. I wish that like some months like I'm clearing like just barely to be able to pay my rent. Other months I do have some more disposable income. So I just wish that I just had more money so that I didn't have to worry from month to month.
Makes sense. And what current debts do you have right now?
Just credit card debt. I don't have any other loans or anything like that.
Okay. And what's the total balance on across all credit cards?
So I have 2 credit cards, but there's one credit card that I use most of the time. The other credit card I just use sometimes. But across both credit cards, right now I have about 5,500 in debt.
Okay. So 5,500 on your credit cards, no other debt. And what assets do you have right now?
I have a little bit over 15 grand in my savings.
Okay. And then it looks like you have about $2,000 in your checking account.
About, yes.
Okay. So you got $17,000 worth of assets, 5,500 in debt with the credit cards right now. Does that sound about right?
About right, yes.
Okay. And there's no other investment accounts, retirement accounts, anything of that nature?
No, I don't have any investments. That's something that I'm definitely interested in. That's something that I was looking into, in order to, be able to make some money with that, to invest in something that's relatively low risk, so that in the long run, I'm, making money off of it rather than losing a lot of money with it.
Okay. So total assets, $17,000. Total debts, about $5,500. That puts your net worth at about $11,500 then.
Mhm.
So future career goals, it sounds like you want to pursue acting, get more established in the acting world and kind of grow in that world, correct?
Yes.
No use or no desire to be using that education degree anytime soon, at least.
Not to go back into the classroom full time. The only way that I would consider using it is like if someone was interested in a tutor, I would consider doing that, like, something part-time with education. It's also come in handy like for previous auditions and previous other things that I did, where like the fact that I have like actual teaching experience. And like there is this one project that I did where there were kids on set, so they were like really interested in people who like have like real world experience working for kids. So yeah, basically if my education background comes in handy, like, for the entertainment and acting world, and just doing something like tutoring, that's what I would be interested in.
Okay, makes sense. Let's talk about future financial goals. Do you have any future financial goals you're trying to hit or achieve or kind of written down?
Yeah, very simply, future financial goals are to just make more money, be more financially stable, have more disposable income. And like I already mentioned, another goal of mine would be to potentially invest in something, so that I could have like more income through the investments.
Okay. And question for you when it comes to like financial stability, obviously making more income can help, not living paycheck to paycheck or not having debt. But if you don't take control of your money now, making more money is not necessarily going to solve the issue. Are you aware roughly what percentage of people making over $100,000 a year live paycheck to paycheck?
I'm not, no.
So there's a study or a headline I saw on online. I think it's about 49% of people making over $100,000 a year actually live paycheck to paycheck. So
Wow.
a lot of people have the idea or thought process that, hey, I'll be able to control my money when I make more money. But the reality is, you look at statistics right there, and if 49% of people making over $100,000 a year are living paycheck to paycheck, not always a income problem. Obviously, there are times that income does help. Income does help not have that problem, but education, prioritization, and having a plan is what kind of matters first. Is like, if you can't manage making $50,000 a year, you're not going to be able to manage making $100,000 a year without changing habits, because you'll see that new shiny ring or that new car or whatever it might be and get that lifestyle creep. And next thing you know, you'll have no money in the beach pay period. So just a statistic out there for you to kind of think on. And everyone watching the show is, yes, making more money makes it easier to save money typically. But if you don't start controlling your money, don't start planning your money right now, you're going to find yourself in the same boat 12 months from now. You might get a pay raise for $10,000. And then 12 months from now, you'll be like, where did that money go? Or why do I still feel like I'm living paycheck to paycheck, even though I got a $12,000 raise? And it's probably because you increase your lifestyle, you increase your spending, you took on more debt, you buy that new car, whatever it might be. And that's one of the problems in America right now is people are living above their means. And when they make more money, they continue to live beyond their means. So just something, fun little statistic there. And kind of goes to show that you have to be able to manage small amounts of money to even manage large amounts of money. And that's why also, majority of lottery winners go broke within a few years, or majority of professional athletes go broke within 5 or 6 years of leaving the league because they had a big influx of money, but they never learned how to manage that money. And you can go first round draft pick in the NFL or NBA or MLB, get a huge multi-million dollar signing bonus, and that money can be gone when you got friends and family coming out of the woods asking for money, or you buy people cars, houses, whatever. And then an injury happens, or you get cut from a team and you went from making $1 million a year to nothing, and you don't know how to manage your money. And frankly, if you come into millions of dollars, you should never have to worry about money again, because you can set yourself up for financial success if you live below your means. So anyway, that's my rant on when it comes to income is definitely a big piece of the puzzle, but you also have to learn how to manage your money if you are not making a tremendous income. That would definitely help, but still have to take action now. Let's talk about your financial upbringing, education, your childhood. What was your childhood like?
So my childhood, I grew up in Wilkes-Barre, Pennsylvania. So by Scranton, which is the home of The Office. If anybody out there is familiar with that show, I grew up in the suburbs. It was, a mostly middle to upper middle class neighborhood. My mom was, able to stay home with me. My dad was working, and my parents, like, as far as money goes, like, I, was never in a position where my parents, like, didn't have enough money, or like where they had to, like, not be able to buy me something that I either wanted or needed because of money. So I was very fortunate in that regard. My parents were always savers, and they still are savers to this day. They got a savings account established for me from the time when I was very little. And like whenever I would get money for birthdays and stuff, they would put some money away in there. So I definitely grew up learning the importance of savings. And like I remember my parents for cars, like I don't remember my parents ever buying a brand new car. Like whenever they needed a new car, they would always buy a used car, and they were never ones to like, make like a big purchase or to get something unless they really, really needed it. So I also grew up with, kind of this mentality of like, oh, if it's not broke, like, we don't need a new one until like we actually do need a new one. Like, who cares if it's old, as long as it's still working perfectly fine, we will get a new one when we need it. So yeah, like I said, I grew up in an environment where money was never an issue, and also where my parents were never overspending on stuff that they didn't need. So I think that I carried that mentality with me, that like, I always want to make sure that I have money in savings, and if like, especially for big purchases, if it's not something that I need right now, save my money and don't just buy something really expensive just to buy.
Makes sense. And did your parents teach you much about money growing up? Did they talk to you about money much?
They talked to me a little bit about money, like as far as the importance of saving, and like what you were mentioning earlier, that a lot of people live above their means. Like I remember my parents saying, like, my dad quoted this a couple times: "A fool and his money are soon parted." So they, really like, tried to talk to me about how you shouldn't be living beyond your means, and you should always be saving money when you start to make money. And I knew that my parents had investments growing up, and they also worked with a financial advisor. But as far as like, other than that, like, as far as like, oh, don't be spending beyond your means, it's very important that you're always saving money. They never really went into like the nitty gritty of finances. Like, for example, with their investments, like I know that my parents have investments, but I'm not really sure, like, all the ins and outs of that. Like, how exactly, like, did they start with the investments and all that? So.
Okay. So more generic, hey, saving money, don't live beyond your means, but digging in the nitty gritty of these are types of investments you have, types of accounts, makes sense.
Yeah.
Let's talk about your current financial situation. And I have some questions for you because off the bat, we talked about you have credit card debt, $5,500 in credit card debt, but you have $17,000 between checking account and your savings account. Why are you carrying a balance on your credit card, just giving this credit card company looks like $70, $75 a month in interest when you have the money in your savings account that you can pay off tomorrow?
I guess it's because I want to make sure that I have money in my savings account in case like I really need it, or in case, like in case of an emergency. I don't want to completely or almost completely deplete my savings account. And then if something occurs, like where I need that money.
You won't be depleted if you go from 15,000 down to 11,500 in your checking account. You still got, I mean, if you're spending $2,000 or $3,000 a month in living expenses, you still got 3 to 6 months worth of living expenses in there.
I realize that. Yeah. I think just it's probably just like me, where I just want to know that like I have like more money available to me than like just for a couple months worth of expenses. That's probably like, just a hang up that I have. But like me, like knowing like, okay, I only have like enough money for like the next 3 to 6 months. That like thinking about that would like, freak me out, rather than knowing, okay, well, I have like, 14, 15, 16 grand in my savings account.
I mean, that $5,000 is only going to get you, looking at your expenses, probably 2 months beyond that. But I mean, basically what you're doing right now by keeping your money in your savings account versus paying a credit card is you're just taking $75 and lighting it on fire, because that money is not making more in your savings account than it's a credit card account. So in theory, by paying off your credit card, you're paying yourself $100 more a month, because you don't have that minimum payment of $103. You don't have $70 a month going towards interest. And that puts you in a much better financial situation, because right now your interest on that credit card, I'm assuming, is 20 to 30%. And the money in your savings account is probably anywhere from 1 to 5%. So you're losing 15% a year on that balance. So if you got a 20% interest rate on that credit card, we paid $70 a month in interest. So if you do that for a year, it's $850 that should be staying in your pocket of just interest that you're paying to the credit card company right now. There's, in my opinion, there's no reason ever to carry a credit card balance when you have money in your checking account. Yes, if you have $200 or $100 or $500, if you go the Dave Ramsey route and save $1,000 for your emergency fund before you start paying off debt, then you have $1,000. If you want to be a little bit above that, do $2,000 or $3,000. But beyond that, you're just kind of lighting money on fire, keeping it in your savings account versus paying off the credit card debt.
I guess I never really thought of it that way before. Like I knew that I was getting charged interest. Like I was always like I knew that I was always paying off more than the minimum amount that was due, because like the minimum amount due, I noticed it could be like a minuscule amount, and like I always paid off like way more than the minimum amount due, and like I knew that I was getting charged some interest, but I guess I never looked at it as the way that you just described.
Yeah, because right now you're just taking $70 out of your bank account, lighting it on fire and giving it to the bank, versus, okay, you want to keep more money, save more money. You can do that by not paying the bank $70 a month. That's $70 a month back in your pocket. You're never going to outperform credit card debt in the stock market and real estate and anything, because credit card debt is so astronomically high that frankly, it's just never a good idea to carry credit card debt. And you asked about a balance transfer when we were talking earlier when it comes to credit cards or any of that. And that doesn't even make sense either, because you have the money in your bank account to do it. Yes, hypothetically, you could transfer this to another credit card for a 0% introductory APR for 18 months. You're going to pay a balance transfer fee on that. But there's no reason to do that when you have the money in your bank account. And credit card debt is honestly one of the biggest wealth killers in America, because right now we're over $1 trillion in America in credit card debt. The interest rate just destroys people. If you pay the minimum payments on this, it'd probably take you 20 years to pay it off, which would be terrifying. And people get in situations where the balance continues to grow. They don't take action. It continues to grow. And you're saying you're terrified about being in a spot where you don't have money for an emergency. And this is worst case situation, we'll call it, is say you pay the $5,000 off in credit card debt. So you have $11,000 in your account. Worst case emergency happens and you need $15,000. You deplete your savings of the $11,000 and you go into $4,000 worth of credit card debt at that point. It's not something I would suggest doing. I would say, how can you figure out a solution to cash flow it? Because I never think credit card debt's a good idea. But you're just thought about what if emergencies, etc. Worst case situation, you're going to find yourself in that credit card debt again. And best situation is you pay off this debt and you have $70 a month back in your pocket that you can then be adding towards your savings if you want to build up more than 3 to 6 months of emergency fund. So if that money could go back in your account and you save $1,000 a year in interest, and that allows you to be debt free, that allows you to not have $5,000 worth of credit card payments that you have to think about. And frankly, if you're paying a balance on a credit card, I would never suggest you have a credit card, because that means you're spending money that you can't afford. And in our conversation earlier, you were saying your parents told you to always have money in savings, don't live beyond your means. But this is a pure example of kind of doing the opposite of that when you have $5,000 in credit card debt that you're not paying off every single month. And a lot of people chase credit card points. They chase credit score with a credit card, but then they find themselves in credit card debt where, again, what you've done is you're paying $70 a month in interest charges. And if I assume this has probably been going on for a few months, which means there's hundreds of dollars worth of interest that you've paid to the bank versus keeping for yourself. So, and this having a credit card is not beneficial to you. It's actually hindering your financial future, because you're paying them more money than on interest alone. And you'd be better off having a debit card and swiping that. And that way you're not physically able to spend more money than you have in your bank account.
Yeah, I agree. Yeah, like I said, I never really thought of it that way before. Yeah.
Yeah. Hey, and that's why I started the show, because I want to have frank conversation with people and help them understand their finances better. And I'm gonna do a shameless plug. If you're watching this, hit the like and subscribe button, because credit card debt is $1 trillion here in America, and I want to help people like Maryann get out of credit card debt, stay out of credit card debt, and that's the best way to do that. So that's really why I started this, because a lot of people don't look at their finances that way. They don't understand the ins and outs of how credit card debt is destroying them with interest rates, and why I'm glad you're on the show today. So
Yes, yes.
so let's talk more. So what's your takeaway from that? What do you think your next steps are on the credit card debt?
I think that I should, seriously consider actually just biting the bullet and paying it off. And then like once I do get it paid off, like I'll have less in my my bank account, but I will then, work on, like, rather than using like any money that I am earning right now to, like, just be paying off the credit card debt, I could actually be using that money, like just putting it away in my bank account and having like my savings account grow.
You sound very hesitant on doing that. You sound like you're like, I understand what he's saying, but I'm scared to do it.
Yeah, I guess like I feel a little better about it now, like that I heard you lay it all out there, like especially like, with the amount of money that I'm paying in interest and all that. But I'm like the hesitant part is like, okay, well, like, what if something really bad happens where I need that money? I mean, like, hopefully, like, knock on wood, nothing will happen. And then like once I get the credit card stuff paid off, then what, like, that would, it sounds like it would work out, like it would start to work out for me in the long run, because like I said, rather than just like spending my money every month to try to pay off my credit cards, like if I like pay off all those expenses, and if I'm not really like charging like, any other major expenses on the card, then the money that I am making, it would just, go back into my savings account, and I hopefully will be able to build that savings account up again. But yeah, I mean, there is a part of me that's still like a little hesitant to do that, but hearing you lay it all out, like, thinking ahead, like, yeah, my account is going to take a hit, but thinking ahead, it will probably work out for me beneficially in the long run.
And that's what my personal opinion is. That's what I would do, is I'd be paying all this credit card debt tonight and never have to worry about never going in debt again after this, but paying it off so you can start saving more money yourself. You don't have to worry about, I mean, last month it looks like you spent $1,500 you sent towards paying off these credit cards. You don't have to do that every single month, and you'll be keeping that money in your pocket, and you never have to worry about it. You don't have to be lighting $70 a month on fire in interest charges. Again, worst case situation, which again, hopefully nothing like this happens, but say you do need more money, worst case is you hustle and figure out a way to cash flow it. But absolute worst case is it's back on a credit card. And I hope that's the last resort I'd ever do. I'd never suggest, hey, let's put emergencies on credit cards. Let's figure out ways to sell things in the house or go pick up part-time shifts or new jobs to be able to cash flow things. If, say, you need a new car or whatever it might be, worst case is you find yourself in the same situation where you have more credit card debt. But right now it is inhibiting your financial future because you're just giving money to the bank. The only downside in this situation, in my opinion, is the bank gets $70 less a month in interest. So it only affects them. It puts money in your pocket that was going to the bank.
Yeah. It might work out negatively for the bank, but it's going to work out positively for me.
And that's what we're here to do. We're here to improve your financial situation, not the bank's.
Yes.
Yes.
Let's
talk about your current budgeting process. Do you budget your money? Do you use any apps or platforms to track your spending?
I don't. That's something that I was considering doing, and that like I briefly tried in the past, but because my expenses kind of vary from month to month, that like I felt like it caused me to become like more, like more paranoid about that, and like I was worrying more about it than what I was like without like, doing the whole budgeting thing. But budgeting, like, actually, like, setting a budget for myself, that is something that I'm interested in, and it might be something that could potentially be beneficial to me.
Yeah, I mean, frankly, if you're not budgeting, if you're not understanding where your money's going, you're going to find yourself in spots where you didn't know how much money you're spending the month before, that your money's going out just as quickly as it came in, and you're going to find yourself in a bad financial situation. if you're not budgeting, if you're not tracking your spending, then it's very difficult to build wealth, to get out of debt. Again, like I said, a lot of people wait until they're making more money or have consistent income, in your instance, to start budgeting. But again, the same issues are going to arise. Those same bad habits are going to happen when you make more money. And the only way to do that is to start fixing those bad habits, to start being intentional about your money and start setting a plan. It's kind of like working out. Is you build a plan. Hey, this is my workout Monday, Tuesday, Wednesday, Thursday, Friday. This is what I'm going to eat because I'm trying to add muscle, I'm trying to lose weight, whatever it is. You build out a plan. And if you go off track of that plan or you don't stick to that plan, your bad habits are going to creep back. And same thing with budgeting is you have to set a plan and tell your money, hey, this is where what I'm going to do with it. And if you stop following that budget, then those same bad habits, that swiping a credit card or buying things that you can't afford, is going to continue to creep back in. So in my opinion, if you're not budgeting, if you're not tracking your money, you're going to find it very difficult to get ahead. You're going to find it very difficult to stay out of debt. And you're going to find yourself in the same situation even after you pay off this credit card, because you're going to wake up 12 months from now and be like, oh, I don't know where my money went. And it went to shopping on this or spending money on this. So if you don't, you're doomed, and you're going to continue to just have the same bad habits unless you're very intentional about your money and you start telling it where it's going, versus right now, without a budget, it's telling you where it's going because you have no idea what's happening. You don't know if you spent $300 last month on shopping. You don't know if you spent $300 on food or if you spent $600 on food. And without knowing that, without tracking that, you're never going to know that. And you're never going to be able to figure out how to cut back and start prioritizing things in your life that actually matter. So
Yeah, I agree. Yep.
And the best thing is there's free tools to do that. I mean, I use a platform called mint.com, and it's free. I link all my bank accounts, my credit cards, my investment accounts, and it tells me what I spent last month on restaurants, what I spent last month on shopping. My wife and I, we sit down and we look at it every single week and see, okay, we're over budget on this month. We need to stop spending here. Or, hey, we have enough budget in this account to go buy this. Or, hey, we have a vacation coming up. We need to make sure we're not spending money on travel or doing any trips we're trying to save up for it. That allows us to be very intentional about it and prioritize, hey, do I really need that new shirt? Or should I save that for an event coming up in a few months? Or, hey, I want to go out and eat tonight and I want to eat something really nice, but I know I'm going on vacation next month. Maybe we should eat pizza, or maybe we should eat something that's cheaper so we can save up more budget and use that, eat at a nice restaurant when we go on vacation. So it allows you to start thinking about it, be more conscious about your money decisions, and start just prioritizing what actually matters in your life, where you want to spend money on. So what I like spending money on is food and vacation. Those are my top two things outside of my house. But like, I love spending money on food and vacation. I don't care about shopping. I don't care about cars. I care about food and travel. And so that's what I prioritize, and that's what I focus on in that. So it's Ramit Sethi. He's a personal finance writer and author, and he calls it living your rich life. And it says, cut everything on the things you don't love in life and spend where you want to spend, what you enjoy. And that's what your rich life is. And so if your rich life is traveling and you hate shopping, well, why do you have a shopping budget? Let's cut that to the bare bones, and let's increase the travel budget. So it's just all about prioritizing in life what you enjoy spending money on and cutting on the things that don't matter. So does that make sense?
Yeah, makes sense. And it sounds good. Yeah.
So but the issue is, if you don't track it and you don't budget it, then you're never going to know where it's going to go. You can't spend on things you enjoy because you're going to overspend on it. And you can't cut back on other things because you don't know how much money you're spending on things you need to cut back on. So
yeah, it makes it. Again, I never thought of it like that. Like, I was always tracking it, like, from month to month, like, okay, well, knowing that, yes, I definitely spent money on this, and then like kind of going back into my accounts and looking at it. But tracking it and like, actually having like an app to tell me, oh, you spent like X amount of money on this. That would definitely be beneficial.
Well, let's talk about your monthly expenses right now. You sent over a budget, and so we have your net income. We said about $2,750 a month. We have your rent at $1,625. Is that correct?
Yes.
Do you live by yourself, or do you have roommates?
I live by myself. In a couple months, I'm gonna be moving in with my boyfriend. Primarily, he's gonna be moving down here in a couple months, and one of the benefits of doing that is that I'm going to be saving money on rent.
So what's your rent gonna be when y'all move in together?
I don't know exactly because we haven't picked a place yet. But like the places that we're looking at, I guess like when we split the rent in half, I'm gonna be paying like maybe no more than about like a grand to maybe about like 1,200 or so. So I'll be saving like at least a couple hundred.
So you're going to be going from your current apartment, but to a nicer one because it sounds like you can go from 1,600 in total rent to 2,000 or 2,400.
Yeah. I'm gonna be going from a studio to at least a 1 bedroom, potentially a 2 bedroom, if we could find one that like fits our budget. I said, yeah, like obviously, like we can't like survive in a studio, but like I made it very clear. I was like, my half of the rent, I don't want it to be like the same or like even more that I'm paying now. I want to be paying like at least several hundred less in rent.
Yeah. And I think that's a great conversation to have and should have. And frankly, what I think to improve your financial situation, improve your cash flow too, is especially when you're worried about inconsistencies in month and income, is how can you keep that as low as possible? If you can keep that at, if your total rent for 1 bedroom, I don't know what it would be in your current unit, but if it's 1,800 or 2,000, I wouldn't go above that. Let's keep your monthly rent portion to $1,000 or less. And that's going to open up $600 a month in your monthly just cash flow right there. That could be going towards investing, could be going towards saving money for more of an emergency fund, for traveling, kind of allocating different pots. But that's when you have roommates, when you have, if you're moving in with a significant other, that provides you opportunity to save money. And if you go up and rent a $3,200 a month apartment with him and you tell me that, I'm going to be very upset, because talking about right now that you're worried about your money right now and have inconsistencies, you want to figure out ways to cut your expenses, not let's keep them the same or increase them. So I would personally suggest, let's try to keep that at $1,000 or less. Go find the nicest $2,000 apartment, 1 bedroom that fits y'all. That's going to be $625 a month. That's going back in your pocket that you can use on things you enjoy in life and investing for your future. So
Yeah, sounds good.
So rent right now, $1,625. With utilities, another $25. You're at $1,650. You don't have any money on groceries on this document right now. How much you spend a month on groceries, would you say?
Yeah, I think that I forgot to put groceries on there. Again, groceries, it varies month to month. I would say maybe I spend maybe about like 150 on groceries.
Okay. And you have a car out in LA?
I don't know.
Okay. How do you get around town? Public transportation or
public transportation? Public transportation. I take like I get like rides with people if I absolutely have to. I do like a ride share, but mostly it's bus and then the metro out here. I live in a neighborhood where I have like easy access to the metro and then also multiple bus stations. But getting a car, that's like another goal for myself that I want to set. I just know that having a car right now, like, again, that's like more money that I would have to be paying, like, extra money to park my car with my building, extra money to like, maintain my car and gas and all that. But yeah, that's another goal that I have for myself, to eventually get a car.
On that note, what I would like you to not do is go finance a car. Please don't go finance a car when you decide you want a car. But if you're cutting your rent down by $600, if you're cutting these other expenses out and start figuring out consistency with your income, let's save up money for cash for a car. When you just do decide to buy a car, let's pay cash for it. It might not be the prettiest thing in the world. It might not be a $30,000 whatever, but if you can go buy a $10,000 nice Toyota, that's, yes, it might have 80 or 100,000 miles on it. It won't be the prettiest thing in the block, but it gets you from point A to point B. It'll make you feel a lot better than, hey, let's go get a car payment for $400, $500, $600 a month. And that rent payment that you started saving $600 a month, that's going to be out the door just as quickly as you thought. So, because then you're going to have gas, you're going to have car insurance, and those expenses are going to add up quickly. So, then we have subscriptions. You have about $40 a month. We have eating out about $80 a month, entertainment $70, personal care $60, and shopping $150. So that brings total expenses right now to $2,200 with your current rent situation. So if you're making $2,750 a month and your expenses are $2,200, you should have leftovers, which, as you can see, you do have savings right now. You have $15,000 in your savings account. Get rid of the debt. We're at $11,500. So every single month, if you are bringing in $2,750, you should have a leftover $500 a month, which we can start using towards saving up for a car, investing, some of those types of things. Is this your typical spending month, or does it vary? Do you find yourself spending more than that some months? What's your thoughts?
Yeah, this is an average. I mean, like, obviously, subscriptions like Netflix and all that cost doesn't change. But like, other stuff, like as far as like groceries or like, other expenses, that varies. Some months, it's less than that. Other months, it might be a little more than that. I try like, I do like to shop and I like clothes, but like I'm well aware of the fact that like I can't like every single month I can't go spending like, a ton of money on clothes. So I do try to, like we were talking before about like tracking expenses. I would say that the one thing that I do try to track, I don't do it with an app, but like I do really try to be conscious of the spending is like on unnecessary stuff. So like, clothes, like, okay, like, do I really need like, another pair of jeans? No, I don't. So therefore I'm not going to buy it. But yeah, it varies a little bit, but from month to month, but it's not like some months I'm spending like $50 on it. And then another month I'm spending like 700. It doesn't have like that much of a difference.
Okay. And I'm looking through your transactions right now, and in between the credit card I have and the checking account I have, there's honestly not that many transactions for us to kind of go through. So I'm not sure if there's other accounts that your main stuff goes through, but I do have a few questions on here that stand out. We have an AFFIRM payment for $216 on August 2nd. What is that for?
So that is for this reel company to get like a new footage for like a demo reel, and then to put up onto like my afters pages and all that. I'm on an interest-free payment plan with them.
What was the total price of it?
I forget exactly. I think it was it about 1,500?
And how many payments do you have left on it?
I think it was a payment plan for a year. So I think that I should have maybe about like 4 or 5 payments left.
Okay. So if you have 4 payments at $200, you have $800 left on it. That means if it was for a year, it's $2,400 in total cost. But
yeah. Okay.
Frankly, I hate buy now, pay later. I think from a company perspective and from a marketing perspective, it sounds amazing. It does. It's, hey, buy now, pay later, interest free. This sounds great. It's the same thing as an introductory rate credit card. People put on it and they start spending money that they can't afford. And AFFIRM's the same thing. It's the same thing as a credit card. It's just interest free credit card. And if you get to that end of that period or you miss payments, your interest rate skyrockets. So I'm not a fan, frankly, of interest-free payments, whether it's a credit card, whether it's an AFFIRM payment. It's still debt at the end of the day. You owe someone $800 still on this credit card. So frankly, what I'd do too is I would pay that off as well and be done with it. That's $200 a month coming out of your pocket right now. And it's the same thing as your credit card. No, you're not paying interest on it right now, but it is still a monthly payment. It's still debt. The issue is with these monthly payments with AFFIRM or any other company is you make a $200 transaction and it's only $50 a month for 4 months. And then a week later, you do the same thing and you just continue to build these up. You're like, oh, I can afford that. But then once you get multiple of those going, it's interest-free payments, but you're up to your eyeballs in interest-free payments on stuff you can't actually afford. So my thinking always is if you can't pay cash for it, whether it's a car, whether it is shopping, whether it's travel, whether it is a demo reel in this instance, you can't afford it because all you're doing is borrowing money from someone else. And so I forget what the saying is. It's the borrower is slave to the lender. And essentially by borrowing money, you are the slave to the lender because you are at their whims. You owe them money and you have to pay that back. And so I'm never a fan of taking on debt, whether it's buy now, pay later, interest free, whether it's a car loan, whether it's credit card debt. Because again, that's $200 a month coming out of your pocket. And if you can't pay cash for it up front, probably shouldn't need it, probably shouldn't buy it. And it makes you really think twice about purchases versus buy now, pay later. Makes it so much easier to click yes because you're like, oh, I have to pay a portion of it today. I'll worry about it tomorrow. And that's the wrong mindset. And that's, again, why America's in $1 trillion worth of credit card debt. Because when you're swiping that credit card, same way the firm payment is, oh, I have to pay that off for a few weeks. And then something happens, an emergency happens, or something comes up, or your income decreases, or you finance a car, and your life changes, and you can't afford those payments, and you find yourself in a whirlwind of debt. So,
yeah, again, I never thought of it that way.
Yeah, so that's why my take when it comes to debt, it's a never-ending cycle. And if you give an inch on interest-free loans, then you're going to find yourself in credit card debt, or you're going to find yourself in a car loan, and in my opinion, it's best just to have no consumer debt at all and figure out how to cash flow things, how to save up money for things. And again, it really just makes you ensure that every single dollar you're spending is intentional, that you need it, it's a necessity. And credit cards and Affirm payments make it so easy to buy things that you cannot afford or should not have or are not necessities. You go and buy a $200 dress or a $500 watch or whatever it might be, and it's like, oh, I only have to pay a 12th of this right now, and then I'll pay a 12th of it every single month the next year. And again, you're just sucked into that and locked into that for the time period, and it might not, you wouldn't make that same decision if you paid all up front. So
Yeah, makes sense.
besides that, on your transactions, I mean, the main things I see, it looks like, hey, I saw your commercial. Is that like
It's a class.
is a what? A class? Okay, so you're taking acting classes right now, which I'm all for. And I do have a question on that. So acting, obviously, you're a contractor, I'm assuming, for most of these different gigs. Are you tracking all your expenses for, I mean, you're essentially running your own business as a contractor. Are you tracking all your expenses when it comes to what you're investing into classes for your acting career and any other associated expenses for these different gigs that you're doing?
I just recently started keeping a tab on that. It wasn't something that I ever did before, but I just recently started doing it because I heard a couple people say that potentially when you do your taxes, you could claim all those expenses as like necessary for your business, and potentially you could get a write-off on that. I'm not really sure like how true that is, or whether that's gonna like, go for like classes or any other expenses, but I did hear that.
Yeah. So, I mean, I'm not a CPA, but if you're running a business and you are being a sole independent contractor, if your expenses are ordinary and necessary for the business, no, can you go write off getting Chick-fil-A for lunch? But can you write off, should you be able to write off taking classes to further your acting career? Or if you're doing a gig and it requires you to buy a prop for it, that's something you can definitely chat with a CPA on. And it's always good to have those documented, have them separate, because if this thing continues to grow and you start a company, start an LLC, whatever it is, then you need to make sure that you have all those expenses tracked and probably documented. And it gets very, very messy when you kind of mix those things interpersonally. And right now, at the level you are, it doesn't make sense necessarily probably to launch LLC with the expenses that come with it. It could really, again, comes to talking to a CPA on that. But what does matter is making sure that you're separating your personal expenses from your business and work expenses. So what I like doing, even if you're in this instance, is set up a separate checking account for stuff that is solely business expense and transactions. And that might be the income coming in. And then you have another account that you transfer it to that you have all your groceries, your rent, everything else that are personal expenses that have nothing to do with those gigs, have nothing to do with the business. And that way you keep those separate. And obviously you can transfer money and pay yourself from where the money comes into your personal expense account. But that way, when tax season comes around, when you're trying to account, you don't have to be digging through all these different transactions. And you see Chick-fil-A, you see Walmart, you see Amazon, and you're like, what are these transactions? And you just have those kind of separated accounts to make it just a lot easier to track and understand where money is and what it is spent on. So
again, that's a good idea to set up another account specifically for that.
And let's talk about investing right now. We got a few minutes left. You said one of your goals is investing. And when it comes to investing, it doesn't make sense financially to invest when you have credit card debt, because like I said, the interest rate on a credit card debt, if it's 20 to 30%, you're not going to outpace credit card debt interest in the stock market. The average return of the stock market, the S&P 500, is, accounting for inflation, like to put around 7%. So if you're earning 7% annual rate of return on your investments and you have 20% in credit card debt, there's a 13% difference going to the credit card company than in your bank account. So it's never a good idea to invest when you're in credit card debt, when you have high interest. I'm a fan of paying off all car loans, all credit card payments, all bad debt, all firm payments, stuff like that, before even considering investing. That way there's no risk with that. You pay off the bank, you don't have those monthly payments that allows you to invest more money. But when it comes to investing, are you familiar with what index funds are?
I've heard the term, but I don't actually know what they are. No.
Yeah, so I'll give you a quick rundown. So obviously there's companies like Apple, there's companies like Microsoft, and you can buy a single share of one of those. So say you have $200 and you want to buy a single share of Apple. For cleanliness, we'll say it's $200. I think it's like $180, but say you have $200 and you want to buy a share of Apple for $200. You buy that one share of Apple, it's worth $200. Apple goes to $300, you now have $300. If Apple goes to $100, you now have $100. And all of your money and investments solely based off that one company. And whether something happens to that company, a new competitor comes out, whether they go bankrupt, whether they make bad financial decisions, then all of your money is kind of based solely on that one company. So you're a lot more at risk based on one single company. And in 2000, 2001, the top 20 companies that were the 20 largest companies in America in 2000, 2001, there's probably only 5, I don't know the exact number, but there's only like 5, maybe 3 companies that were the top companies in 2000 that are the same in the top 20 companies in America in 2023, because competitors come out, companies come and fade. Some go bankrupt, some have financial challenges, some have a product that flops on the market and people don't like it, or sales decline, whatever it might be. And there's things outside your control. So if you're betting all your money on a single company, that puts you at a lot more risk. And you talked about, hey, I don't want to be risky with my investments. And by investing in single stocks, you could have a company that goes bankrupt 20 years from now. It could go bankrupt 30 years from now. You don't know. Or it could be the biggest company in the world 70 years from now. But guess what? You have no control of that because you're not running the company. And it just puts a lot more risk on you. So what's, in my opinion, the best route to invest is index funds. And I've gone the single stock route. I've made money investing in single stocks. I've lost a lot of money in single stocks. And I've learned that, hey, I'm not Warren Buffett. I'm not going to beat the S&P 500. I'm not going to beat index funds. And I'm not going to sit here and study balance sheets, income statements, and even try to guess on things outside my control on where these stocks are going to go. My best route, and Warren Buffett says it too, majority of Americans' best route of investing is index funds. And what an index fund is say that same $200 you're going to invest in Apple, say you put in an S&P 500 index fund, that is essentially a basket of 500 stocks. 500 stocks, the 500 largest companies in America, and you're going to own bits and pieces of each one. So in that $200, 5% of that might be Apple, 3% of that might be NVIDIA, 3% might be Microsoft, 1% might be a company you've never heard of. 0.1% is probably another company you've never heard of. That's $1 billion company. What it does, it de-risks you because you own bits and pieces of hundreds of companies. And whether company 1 goes to the moon or company 2 goes bankrupt, guess what? That one company going to zero is not going to affect you because you have so much risk. You're de-risked by investing in hundreds of companies. And if that entire index fund, the S&P 500 goes to zero, guess what? We got more problems than your investment account because that means the top 500 companies in America are worth nothing. And that would be not good. That means the U.S. economy has collapsed. And the last of your worries is going to be your investment portfolio because that means majority of the world's hurting if the top companies in America go broke. So index funds help de-risk you. And you don't have to be a financial wizard, a financial guru. You don't have to be Warren Buffett to invest in index funds. They're easily accessible there's a lot of new apps out there that allow you to invest in index funds. I use one called Acorns. But then there's other ones, competitors to that, like Betterment, like Stash, like Wealthfront, that allow you to auto invest in index funds. And there's other platforms like Charles Schwab or Vanguard or Fidelity that allow you to set up recurring investments into different index funds or mutual fund equivalents that allow you to buy these automatically, so you never have to think about it again, and you don't have to sit here and track the stock market or think about it. You can just set up recurring investments. That's what I do. I set up recurring investments every single week, and I don't think about it. I don't sit here and try to guess whether Apple is going to do better this year than another company, or if Facebook's going to outperform everything else. I don't have to sit here and worry about that because I know my money's going to index funds. Long-term, over time, the U.S. stock market should go up. Obviously, past performance doesn't guarantee future returns, but if I was a betting man, I would assume and expect the U.S. economy to continue to grow, continue to flourish, which means my investments will continue to grow.
Yeah.
Does that make sense?
Sounds good.
Index funds?
Yeah. Mm-hmm. Yeah.
And then there's a lot of different things when it comes to Roth IRAs, traditional IRAs, 401k, stuff of that nature. But just some different knowledge and insights on investing. I'll send you some different resources after this as well to just learn. And that's the best thing you can do right now too, is start educating yourself more, start learning. And you took step 1 coming on the show and having these open and honest conversations about it. And hopefully that was beneficial. And step 2 is start taking action on that. I mean, right now, the main things that I would like to see you do is, if I was in your shoes, is pay off the credit card debt, pay off the AFFIRM payments, and you'll have $10,700 roughly left in your bank account from that. And from there, you can start saving more money, build up a comfortable emergency fund that you want. If it's 6 months, start saving for that. And then from there, try cutting expenses. Like you said with your rent. If you can cut your rent down to $1,000 a month when you move in with your significant other, then hey, that's $600 more a month that can help start building your emergency fund up. And then once you have that built up, let's start thinking about investing. And in the meantime, let's start educating yourself on index funds, on how to invest different platforms, what's best for you. And I'll send you again some different books, resources, things that are beneficial to learn on that. And then also on top of that is income. Income's obviously a big thing with this. And that's something that you've kind of stressed is your income fluctuates up and down with, I'm sure the strikes going on in LA doesn't make it easier for you. And what you need to figure out is how can you make that more consistent? Is it picking up a part-time job so that you have at least stable, consistent hours and still has flexibility when you do get gigs, when you have these opportunities? But I'd like to see some stability there on that front too, so that you can make sure, hey, I can cover my rent with this part-time job. Everything on top of that is the gig stuff that is going to be for saving, for investing, and for spending money. So can you get your necessities covered with a part-time job working 20 hours a week, making $20 an hour? That'll be $1,600 a month roughly before taxes. But if your rent's only $1,000, hey, that's going to cover for your rent. And that's going to cover a little bit on top of that if you're $1,000 a month of rent. So that's what I would suggest is figuring out a plan of the next few months. What are some different jobs, opportunities you can have that have flexibility that fit your lifestyle and goals of acting until that kind of gets more stable, until that continues to grow a little bit, but allows you to have more stability with, hey, I got rent due and I don't have to worry about where that money's coming from. I don't have to worry about making less money than my rent each single month because I have that part-time job that's bringing stuff in. Then everything on top of that is going towards saving, towards spending money on shopping, food, groceries, eating out, etc. But at least you have some basis foundation in case something happens, you don't have gigs coming in. So
yeah, sounds good. Yeah, I loved everything that we talked about. It really put it into a different perspective for me. And I think like in a way, like some of the things that we mentioned, it's something that like I already knew, I just wasn't doing it. But yeah, like talking about like, you know, just paying off like the debt, like that was put like a different way for me. Like I never quite thought of it that way before.
yeah. Well, awesome. Well, I'm glad you enjoyed it. I'm glad it was beneficial for you. I mean, that's again the whole point of why I started this channel, to help the world talk more about money and think about money a little bit differently, and just improve your financial situation. So, Maryann, really do appreciate your time today. Really appreciate you coming in and being open and honest and transparent and being receptive to feedback and asking questions and just being a great guest on here. And really do wish you all the best moving forward. I'm hoping that we do an update 6 months or 12 months from now that you're hopefully debt-free by the end of this week is my hope. 6 or 12 months from now, we have a conversation and your income's increased. You started investing and started building for the long term. So really would love to do a catch-up call in 6 to 12 months, do a catch-up there, see what steps you've taken from there. And again, really just do appreciate your time today.
Yeah, thank you very much. I enjoyed it.